Hey everyone, how you doing today? It is Monday, and you know what that means. We bring back Greg Dickerson. This is episode number 2 in our 3-part series. How you doing, man?
I'm doing good, coming to you from my mobile studio, running the roads today.
I love it. I love it. I love it. So, hey, we talked off air, and it sounds like Robert Kiyosaki is out there putting out some kind of crash videos. As anybody knows that's read my book or followed me, that first book, Rich Dad Poor Dad, changed my life. There's no question. The last 5 or 6 years, he's gotten kind of wonky, right? I'd call him a gold bug. I don't know if he would wear that, but that's what I'd call it. And now he likes to hear himself talk these days, I think is one way to put it. So what you said you saw something in the last 24 hours that was interesting?
Yeah, yesterday I think is when he put it out, but again, another housing market crash warning that there's a huge crash in the housing market coming,
Oh,
and no real data to back it up other than his whole main point. And this is a good one. His whole main point was the forbearance again. How many people are in forbearance? And his thing is that's going to create a crash in housing because the people that are in forbearance, if they've lost their job, they're not going to be able to qualify what he's saying for forbearance. Now, what he's mixing up is forbearance is not foreclosure, forbearance is not delinquency, and forbearance is not a loan modification. Forbearance is just a vacation from making your payments.
mhm.
So I'm gonna say right now, it's got to be, I bet you 50% or more of the people that are in forbearance are just using that because they can. They're just, why pay your mortgage if you don't have to? Because all you had to do is call the lender and say, hey, I can't pay my mortgage. And the lender's like, okay, don't worry about it. There was no paperwork, there was no nothing. For some lenders, you know, everyone's different. Some might had you fill something out, but for the most part, you could either go online or you could just make a phone call. Credit cards, student loans, mortgage payments, a number of different vehicles, and just say I can't make my payment. So you can build your cash flow, build it up. Now, at the end of that forbearance period, and it could be 6 months, could be a year, could be whatever, you're going to have to deal with that balance that's been built up. So what they'll tell you is it's all going to be due at the end of this forbearance period. But once you get there, you know, the lenders are going to work with you, in some form or fashion, which is going to be a loan modification at that point. And then, yes, you're going to have to provide some documentation of showing why you lost your income, why you couldn't make your payments, those types of things for the banks to work with you. But they're going to be very conducive to working things out. The banks don't want a bunch of foreclosures. They don't want where they didn't know and didn't care and just stupid stuff was happening. This is very different. They don't want that to happen again. So they're going to work with these borrowers. And if you've lost your job, as long as you can demonstrate the ability to pay somehow, they're going to work with you. And if you can't, we're in the hottest housing market ever. You can sell your house. So that he didn't mention that. He didn't mention, that I mean, there is no inventory. So if every house that's in forbearance right now got put on the market, they probably all get sold with multiple offers in days.
Yeah. Yeah, so Robert Kiyosaki is wrong. As is Ken McElroy. They both have had working relationships. Ken put out a similar video about a month ago, which I just tore apart. Ken, in fairness to Ken, he's more of a multifamily. He's got 10,000 units. Apartments are struggling. Single family isn't. I actually had a mortgage broker on the other day to really dig into this, right? So
Mhm.
it's been my experience, your experience, but I had somebody from the mortgage industry on the other day. So first and foremost, folks, let's tear apart because there's no crash next year. It's mathematically impossible unless interest rates double, right? With that one black swan exception, impossible. First, I asked the mortgage broker, if a client is in forbearance, even if they lost their job and they have no equity, right? They're like the prime risk for foreclosure. Has the foreclosure clock started? The answer is no. A forbearance, a vacation, as you say, is an agreement between the lender and the person who borrowed the money. The only time the foreclosure clock starts is when there isn't an agreement. The lender wants its money and the borrower can't pay. That's when the clock starts. So right now, 3.2 million people in forbearance are not one day late. No clock has started for
It's
anybody.
it's not delinquency and it's not default.
Exactly. So again, let's take the worst case scenario because I believe, like you, at least 50% would pay if they had to, but they're not. But let's just say all of them. Let's say they have no equity, which is bogus. Most of them have tons of equity, but let's say they have zero,
Hmm.
and let's say they have no job, and let's say they have to leave the state. So they are like the prime candidate, like must sell right now. This is so crazy. And I don't know why these people don't get called on the carpet. If all of that happened to all 3.2 million people, you're right, the hottest housing market, stuff would get scooped up. But let's just say it stopped. The foreclosure time frame last time was 750 days in California, 1,400 days in Nevada, and like 1,550 days in New York. The foreclosure clock would take all of these assets into 2022 or 2023. None of this inventory would show up in 2021. Mathematically impossible. You got to be 90 days late before an NOD. Then an NOD gets filed. If you're in a non-judicial state, if you're in a judicial state, it's even longer. I mean, the people act like this $3.2 million, 3.2 million homes are just going to show up tomorrow.
Yeah.
Even it's not. It's mathematically impossible.
Yeah, yeah. And even if it did, there's buyers, in
Yeah.
all different levels, and the lenders are going to work with people this go around. The only one that's going to lose their house is somebody who just ignores the bank, hides, sticks their head in the sand, and doesn't communicate. Then that's a possibility. But even then, who knows how long that could take. But it's just really interesting, and it's clickbait. That's what a lot of that is,
He's trying
just
to sell
clickbait for
books.
views.
He's selling books and courses.
Yeah, which is great. The books, that book changed my life. I mean, that opened my mind. I mean, so I'm not a hater of Robert. I think
No, not
Robert
at all.
Kiyosaki's, his products are life changing, have changed a lot of people. But as he's gotten older, he has become more a little bit on the conspiracy theory side, and
Yeah.
doomsday kind of stuff, and things like that. And it's interesting how that has kind of changed a little bit. But no, that book changed my life. It was the first one I read. But again, what I got from that was I wanted to be Rich Dad.
Yeah.
I didn't want to be Robert Kiyosaki. I wanted to be Rich Dad. I
I
wanted to
still
own
think
the
that's
businesses,
hilarious. You,
have
you,
people coming to me, and I wanted to be that guy.
that is so funny to me because again, I read
So
that
that's what I
book.
did.
I
That's what
read
I
the book.
did.
I'm Robert. You're Rich Dad. See, that's why
Yeah.
you're just smarter than me. I read the book and I'm Robert. You read the book and you're Rich Dad. I'm like, God damn it! Why didn't I see that?
Yeah, well, it's just interesting. And then that's what I did. I went and I did a bunch of businesses that generate cash flow to invest in other assets. And, that's been my career and my life. And now I'm teaching other people how to do it. The difference is I know a lot more now than I did back then. And like people are like, what would you do if you could do it all over again? So for anybody who's listening, if I could start all over again with the knowledge I have right now, I would go. And I know you got one rental at a time behind you, but I would go 150 or $100 million rental at a time, not one house at a time. I'd go one 200, 400, 600 unit at a time. I would educate myself. I would have started bigger right out of the gate instead of working my way up to it, because I didn't know that you don't have to start small. You don't have to start. That's if you want to go big. Now,
Mhm.
that's me. That's if I were starting
Right.
over.
That's okay.
So that everybody's different. Everybody's got different goals. Not everybody wants to be big. But for me personally, I didn't know how to raise capital. I didn't know you could raise capital. I mean, I didn't even know you could flip land. I mean, my first deal was a lot flip.
I
And
remember.
when the realtor friend of mine that brought me that deal, I thought, I was like, is this legal? Can you actually buy something today and resell it for more tomorrow? Land. Is that legal? I didn't think you could do it.
Yeah.
It was really funny. But so anyways, that's where I came from, because I had to learn it all the hard way. And so that's what I would do. If I could do it all over again, I would educate myself. I would surround myself with people doing, the big deals, and I would go work with them, for them, and learn everything I could. And I would get out there and start raising capital and get myself into big deals, because right now anybody can borrow money from the agency. If you've got a loan guarantor, if you've got the ability to raise capital, you can get that deal financed. I mean, it's amazing. Anybody, it's kind of like 0809 in residential. If you got a pulse, you can get a Freddie Fannie loan
Yeah.
and get a big deal done. So it's like really interesting, that world is right now. Wasn't so much like that back then, but there was still financing, for large assets back then.
Yeah. Yeah. So something I've seen in Robert's video. So first and foremost, like you, he's changed my life. He's changing people's life. He has conspiracy is the right word, I think, right? He's sort of taken a hard right turn on some topics. He has a huge platform. For a while there, he was all about gold. I've actually seen him take a right turn on Bitcoin these days. Now it's like,
Hmm.
everybody should buy Bitcoin, which I thought was really interesting. But yeah, there's no chance for a 2021 crash in single family assets.
Yeah, even if interest rates doubled, tripled, whatever, it's just going to slow the demand down. So, if there's no buyers, then there's creative financing. I mean, it just, yeah,
Yeah, it just
it's
doesn't make
just for a complete crash. Now, and like you said, everything's up 20, 30%. So if you lose 20, 30%, you're back to where you were before it started. So it's not really a crash. I mean,
yeah.
we're in a bubble in a lot of ways with a lot of different things. And housing is one of them. I mean, we're
Yeah.
in a bubble with housing because of interest rates. Again, people buy payments. So, if you put rates back at 4.5%, 5%, then values are back to where they were before interest rates jumped down into the twos.
Exactly. Yeah. Yeah. In the end, folks, I think single family assets. And again, the last thing I want to say about the mortgage broker, there was one more thing that we talked about, because he was a mortgage broker before the last crash. So he's got at least 2 decades on him. He goes, Michael,
Yeah.
the biggest difference is how far banks will bend over if you miss a payment, right? I.e.,
Well,
take
and
a
it's
second, because last time it was, we won't talk to you until you're 90 days late. And then there's nothing we could do. We're foreclosing.
right.
That they're not doing that this time. That's like the last resort.
Right. And this is very different from a regulatory standpoint. The government is behind them now going, look, we're going to monetize that debt, those losses, work with your borrowers. They don't
Yeah.
want, that to go on. And people at the Fed and the Treasury are all the people who were there in 08, 09. And
Mhm.
if you remember when this started, Neil Kashkari, who was, at the Treasury last go around, he was either Fed or Treasury, I can't remember, but he was there during 08, 09. He got on 60 Minutes and said, we have unlimited funds to shore up the banks. 2008-9 is not going to happen. That was the first guy, front man, out front and center, and he's still at it now. And that's what you're hearing from the banks. And now you got Janet Yellen going in there, who's just going to load everybody's bank account. So,
Yeah.
you know,
Yeah, she is.
so it
Yeah.
just can't happen. If you're in forbearance, you just send her an email and she'll put the funds in your bank so you can make the payments.
Not quite, but yes, I understand what you're saying. Yeah, this has been a lot of fun. Got to appreciate Robert. He's still kicking. But yeah, I actually chuckle off air sometimes when I think about Rich Dad, Poor Dad. I take it. I'm Robert. You take it. You're Rich Dad. I'm like, damn it. That's why Greg is just so awesome to talk to on Mondays. Thanks, man.
All right.